All right. Happy Friday, everybody. Good afternoon, everybody. Happy Friday. It's time for my favorite part of the week, my weekly wrap-up live stream. And this week has been something I have been waiting for well over a year. The Great Rotation is upon us. At least that's the name that the financial press is giving to this week. To me, it looked like a sell-off in stocks. It looked like people are finally waking up to what I have been screaming and pounding and shouting and randoing and conspiracy theorizing for the last 10 months, that the AI Mania is a bunch of smoke and mirrors. That's a polite way of saying it's all bullshit. That people are finally waking up to, wait, what are we actually buying when we buy these stocks and these AI companies? What are we actually getting for our money? People are finally starting to ask that question. And, well, they're calling it the Great Rotation because no matter what, the financial press will always have to put a positive spin on whatever's happening because, remember, the financial press gets all their money from selling advertising to the financial services industry. And, well, if we tell people, hey, you're about to lose a whole bunch of money, well, that makes them not want to send their money to the financial services industry. And so Bloomberg, CNBC, they'd start losing advertising if they said that. And so they're calling it the Great Rotation to put a positive spin on it. And my best interpretation of the Great Rotation is the thumbnail: your dollar's rotating about the drain as your money is flushed down the toilet, because that's what's going to happen as soon as people start exiting this AI trade. And if you think what we saw this week was bad, guys, we did not see much this week at all. Because let me tell you, this AI Mania thing, this is arguably the most crowded trade in history. And I mean everybody except for me, I'm pretty much the last one that owns no AI stocks. And admittedly, I sat out this monster rally in AI stocks. So the joke's on me. Other people made money, I didn't. That's fine. I'll take that. I wear my Perma Bear on the sleeve and I'll own it. But guys, if you're sitting in these stocks and you made a ton of money, guess what? Everyone in the world already owns your stock, right? There's nobody left who doesn't own NVIDIA. Every fund manager, every big asset manager out there, every big financial advisor, they've all piled into this stock. And some of them have admitted that the only reason they've done it is because everybody else has done it and they don't want to be the only ones not doing it, right? Nobody wants to explain to their clients why they have not put them into NVIDIA when, oh, I heard from my cousin and Uncle Jethro and Jeb and Jim Bob and everybody else. Why I'm assigning redneck names to everybody, I don't know. But everybody is in NVIDIA stock. And so, well, I guess I better put my clients in NVIDIA stock too. So everybody has already piled into it. Every big fund manager pounding the table has piled into NVIDIA. So let me ask you, if everybody already owns it, when you go to sell, who's going to buy it? It's got to be two sides to every trade, right? And so if the trade is already so crowded, if all the shoe shine boys have already piled in and bid this thing up to 40 times sales, oh my God, 40 times sales. The history books will mock us for this. I'm telling you guys. I mean, 10 times sales was ridiculous. What do you call 40? If everyone in the world already owns the stock, then who's going to buy it when you click sell? There aren't many buyers. Now, every time NVIDIA has dipped, every time the AI stocks have dipped, the dip buyers have come in and bought it up so far. And admittedly, they've bought it up to levels I would have told you a year ago were impossible. If you would have asked me back in September of last year when I was first doing my video skeptical of this AI Mania, do I think NVIDIA would ever be a $3.3 trillion company? I would have said, go home, you're drunk. Well, apparently everybody was drunk, but they didn't go home. They stayed and they kept buying stock. But who's going to buy it? If any selling in any significant amount finally really gets going, and I don't think we saw any significant selling this week. I think that selling we saw this week was just a preview. What happens if people start doing that en masse and nobody steps in to buy? What if the dip buyers are all broke because they don't have any cash left? Inflation ate up everything they've got left. What if all the baby boomers are net sellers because, well, they're living off of their retirements? And what if people start losing their jobs to unemployment, which is rising very steadily, and typically unemployment spikes shortly after the yield curve uninverts, which is happening. shortly after the first rate cut, which is about to happen probably in September. Well, what happens when the unemployment spikes? And now people are no longer working, or a lot fewer people are working. And so they're not passively dumping money into the market in the form of 401k matching and IRA contributions every month. And so the people that they trust to manage that money no longer have it to arbitrarily dump in AI stocks. Then what happens? There's nobody left to buy. And that's when this stuff starts selling off hard. And so the great rotation, it's not so much of, I'm going to rotate from this sector to this sector. Once this great rotation finally starts happening, the only actual rotation is going to be rotating from having money to not having money. I really think that's what's going to happen. I think people are going to get lit up when this AI Mania bubble bursts. And look, it may not happen this time around. All of the indicators are that all the big tech companies are still just blindly pouring cash into CapEx for AI equipment, right? Elon Musk and his 100,000 GPU data center for XAI that he just fired up at 4:20 a.m. because he really wanted to say 4:20 in the tweet. They're still pouring that money into CapEx, all right? So that money is still flowing into NVIDIA right now. Google this week also just posted, we spent $13.5 billion or whatever on CapEx in the last quarter, and we're going to keep spending at least $12 billion for the next 2 quarters. Well, that means they're going to keep buying NVIDIA chips. So NVIDIA's earnings are probably still going to be pretty good. I want to emphasize that. They're probably going to post amazing numbers. But at some point, that growth is going to taper off. Notice Google didn't say they're increasing their CapEx. They're saying they're leaving it at $12 billion. So they're just leveling it off. And by the way, did you notice the reaction to that Tesla earnings? And did you notice the reaction to that Google earnings? Neither one of those companies did so well. And so just blindly saying AI and pouring money into AI is no longer a one-way ticket to higher stocks. And so I got to wonder, if I can't just arbitrarily dump CapEx into AI and expect my stock to go higher, then maybe I won't dump those billions of dollars into CapEx. So at some point, that's going to happen. Anyways, we might get a point where NVIDIA posts amazing earnings and people don't really care because they start to see through it. And every day we're getting another article, another analyst, another bank's head of research posting a note that says, guys, these AI companies are bullshit. They don't, I don't know why I whispered bull and then pronounced shit. I don't know why I just did that. No, I'm not cursing. I didn't say bull out loud. Look, guys, people are starting to ask questions about what they're getting for their money. And if you are one of the people that is heavily invested in these AI stocks, you better pay attention to this, because once that selling really gets ripping, and I don't think this week was the great rotation. I really don't. This week may end up have just been another little correction on the way higher. Entirely plausible. We saw it in April. Maybe that's what's going on here. But sooner or later, this sell-off is going to start, and it is going to be so sudden, swift, and brutal. Everybody is going to be saying, what happened to my gains? Because there just won't be any buyers. And so when people start clicking sell, they're going to have to lower that price until buyers appear. And I don't know what level that is, but if everybody already owns it, it's probably got to be a lot lower. Anyways, it's time to shrink my big melon of a head, and let's see what's going on in the markets today, shall we? And by the way, guys, Mish is not with us again today. Don't worry, Mish and I are fine. We didn't break up or anything like that. We still have our phone calls every morning before the morning live. But Mish is traveling through Asia this week, and so the time differential is just brutal to expect him to be on the stream. So he'll be out in Asia for a couple more weeks. We will be seeing Mish back on the stream. And appreciate everybody sending Mish their good vibes. Safe travels, brother. We are looking forward to having you back on Friday afternoon. And I would also be remiss if I did not plug my new side project with my good friends Travis from Real Estate Mindset and Melody Wright, both of whom have their own YouTube channels as well. We recently started a joint venture called the Doomers News Network, or DNN, where we don't put the positive financial spin on every story. We don't make everything seem like a good thing. We just tell you the whole truth, or should I say the doom, the whole doom, and nothing but the doom. By the way, link to DNN is down in the description, should you feel so inclined. And we'll be going live at DNN at 7 p.m. Eastern time tonight in just a few hours. That'll be my third live stream today. Good thing I ate my Wheaties this morning. Now, let's see what's going on in the markets. By the way, like and subscribe, all that good stuff too. My friends always yell at me when I forget to tell people to like and subscribe. But okay, like and subscribe, do that too. S&P 500 is up 65 points today. It's been a pretty good day, up 1.2%. although it hasn't been that good of a week, today is really just a bounce. Let's take a look at a little bit of a longer term chart. We are looking at daily candles going all the way back to pretty much February of this year here, guys. And you can see this sell-off now entering its second week. Here we go. Let's see. We hit a peak of around what were we at? Like about 5,600, 5,700 in the S&P. Got as low as 54 this week. Now at 54 and change. So a few hundred points in the S&P have sold off over the last 2 weeks. Notably, guys, check out the 50-day moving average. We did recapture that today. So the market caught a little bit of a second wind here. I'm not saying the sell-off is over, but it could be. We saw something similar in April. With this sell-off, we failed the retest of the 50-day moving average, and then we resumed onward and upward. Entirely plausible that that happens again here. Now looking over at the Dow, the chief beneficiary of the great rotation so far, the Dow up a monstrous 700 points today. It was up over 800 at 1.8% higher. 40,663 on the Dow. Let's take a look at the same long-term chart of the Dow going back to about February. And you can see here, though, the Dow over the same time frame, the same 2 weeks or so, it has been a little bit of a sell-off, although the Dow is going to close positive for the week. We opened the week Monday here. So, we're going to end up marginally higher for the week, but all of those gains for the week will have happened just today. I'm not necessarily so sure everybody's going to rotate into the Dow names. We're going to look at a couple of the staples that you have in the Dow to try to figure out where people might be rotating to. And I'm just going to look at a few examples of those and see if that's something that I might want to buy, because I'm a very value conscious investor. I like to ask questions about what I'm buying. I know, crazy, right? What a thought. And even when I look at some of the Dow components, I'm not crazy about what I see there. But at least when it comes to some of the names in the NASDAQ, the Dow is much more reasonably priced. Speaking of the NASDAQ, they're also having a pretty good day here, up 181 points, 1% higher for the NASDAQ, 17,365. But those gains today will not be enough to save the NASDAQ for the week. Again, going back to about February on these daily candles, this sell-off now into its second week here, pretty significant. Now, the NASDAQ on July 10th, was 18,650. And now here we are at 17,330, guys. So, I mean, a sell-off of more than 1,300 points in the NASDAQ over the last 2 weeks. It's been pretty brutal. And by the way, the top, it was pretty much to the day, not exactly, but pretty much to the day, that scene of Jensen Huang signing the girl's boobs at that conference. You guys remember that picture? Like, if only there were signs that this mania was getting a little ridiculous. The CEO of a $3 trillion company signing somebody's boobs. If only there were signs. Well, we're down about 1,300 points in the NASDAQ since then. In particular, just those 2 days, we sold off almost 800 points just on Wednesday and Thursday alone this week. Marginally positive for today here, though. NASDAQ not looking too terrible. We've got a slightly weaker dollar here at 104.3, down 6 basis points. Not a lot of movement in the dollar today. Looking over at bonds, we got yields moving lower. That's bond prices moving higher. So people are rotating a little bit into treasuries, and the big moves are on the longer end of the yield curve. So that's something that people might be great rotating into right now, the long end of the yield curve as it uninverts. The 30-year treasury is at 4.449. That's down 5 basis points. The 10-year yield is at 4.194, down 6.5 points. The 2-year is at 4.387, down 5.5, and the 1 month is pretty much unchanged at 5.376. The inversion between the 2 and the 10 is now, oh wow, what are we, about 17 points? 439 minus 4. All right, about 19 points of inversion. So it's about the same as where it was this morning. Not a lot of movement there. Commodity space, gold is looking a little better than it did this morning, currently up $20 at $23.85 for spot gold. That's up about 0.9%. But silver still can't catch a bid, under $28 for spot silver. You're sitting here at $27.82, down 3 cents or 0.12% lower. Let's just take a look at the silver chart here. Not looking so good, guys. That red line, that 28.30 support, we lost that one yesterday. We need to get back above that one in a hurry if we don't want to have a bigger breakdown here. So far, not looking so hot. Bitcoin, meanwhile, is still looking pretty good. It was up this morning. It's up even more now, $2,000 higher for Bitcoin as priced on Coinbase at $67,800. 828. Are we up for the week? No, we're still negative for the week. But considering all of the dumping of the Mt. Gox Bitcoin that's been happening, I would say Bitcoin fared pretty well this week. You've also got the big Bitcoin conferences getting underway right now. So the Bitcoin conferences are always very good at the cheerleading and ginning up enthusiasm. You'll probably have a little bit of buying coming out of that conference. Also, President Trump is expected, former President Trump, didn't want to gaslight anybody or trigger anyone. Former President Trump is expected to speak at the Bitcoin conference. So Bitcoin may turn into a campaign issue this time around. So we are looking forward to that one. And before I get into the main story, I have a couple thank yous I got to send already. Thank you to my man, Nashville Pasta Man. Thank you so much, Nashville, for the super chat. He says, Madoff customers, all Northeasterners, just saying. Oh, you taking a jab at my region? Is that what you're doing, Nashville? Okay. All right, Midwesterner. You Midwesterners, I don't know. What's a derogatory term for a Midwesterner? I don't know. Flyover guy? Well, I don't know what we could say, but look, I grew up in the Northeast, but it's not like we carry the great banner of the Northeast up here. You know, we don't have any cool sayings like they have in Game of Thrones, like the North remembers. It's not. No, the Northeast, it is what it is. We know what it is. And, we live here. It's home. That's just kind of how we think. The Madoff customers, though, were all Northeasterners. Here I was thinking Bernie Madoff pretty much ripped off everybody, but no, he had a geographic speciality for the Northeasterners. I never knew that. Thank you so much, Nashville, for supporting the channel, sir. Also, thank you for all the tips and messages. Nashville Pasta Man is one of those guys who sends all kinds of good stories my way. Helps make the channel better when you do that. So thank you very much, sir. I appreciate that very much. And the local rocks. Is the H silent? Locals rock. He says, happy Friday, everyone. Thank you very much, Mr. Local. Is that the Top Gear guy in your thumbnail there too? All right, I can get behind that. Happy Friday to you as well. I appreciate the good vibes. And thank you for being a channel member for 4 months. And my man Cole Marsh, ever so reliable, he says, buy a crystal ball and invest accordingly. We could do the Keith Gill thing. We get a magic 8-ball going. I could shake that up, and we could make our investment decisions based on the magic 8-ball. I mean, that would be scientific. I mean, it's better than all the proprietary trading algorithms I hear so much about out there. Might as well just flip a coin. Here, we'll flip this. We'll flip my 10-ounce silver bar. If Stars and Stripes up, buy. If it's the 3.9 fine up, then we'll sell. Just, I'm in bare feet right now. I'm not going to flip a silver bar in bare feet. And that'd be my first live stream injury on the air. We don't want to have that. But thank you so much, Cole Marsh. Appreciate the super chat, the support of the channel, sir. And thank you to Mr. Andy, the lunchbox. He says, have a great weekend, Melons. Right back at you, Andy. I hope you have a good weekend. We have got good weather in the Northeast. It's a good weekend to hurt my back again doing yard work because the freaking weeds are 9 feet tall. Dude, the one thing I was not prepared for when I moved from New Jersey to Pennsylvania was the weeds out here, man. My property used to be a cattle farm for like 200 years. It was a cattle ranch. And, dude, you could pull all the weeds. You can make it look nice and neat. You could put weed fabric down, mulch down. You could sprinkle some preens, so it's supposed to stop the seeds from germinating. It doesn't matter. A month later, you have got a 10-foot-tall frankenweed that's like, weed fabric, delicious. I'm going to grow right through that. Does not slow down for a thing, which means I'm just always trimming and mowing and pulling weeds out here. And it's hard to do when you got a bulging disc in your back. So thank you very much, Andy Lunchbox. How did we get on the Pennsylvania weeds? I'm a little tangential today. Let's get back on track, shall we? Thanks, guys. I appreciate all the super chats and the good vibes. Here is Bloomberg, and this article started okay for me, and the more I read, I'm just shaking my head at how one-dimensional these people are over at Bloomberg. They don't know how to do anything else. The Great Rotation Trade sees investors dump AI giants for less obvious stocks. And, the title was pretty good. I do think that's what the Great Rotation is going to be. It's going to be a big rotation out of tech, in particular, the big tech companies and the AI darlings. I think we started to see that this week. But what less obvious stocks is Bloomberg talking about here? Well, let's see what some of their ideas are. Signs that equity investors are getting cold feet over the rapid advances in artificial intelligence leaders have put a spotlight on some less obvious beneficiaries of the technology boom. A 7-fold surge in shares of NVIDIA since the launch of ChatGPT in late 2022, which seems totally organic, natural price movement, right? Lots of stocks go up 7-fold in 2 years. That helped drive a mega cap-led rally around the world. but concerns over the sustainability of those gains, as well as geopolitical tensions and shifts in global monetary policy, are now driving a broadening of the market amid a hunt for new drivers. Investors are selling AI giants to snap up smaller stocks and defensives that have lagged behind. That rotation coincides with the AI theme's expansion to areas beyond chips and software, including the vast amounts of power, land, and that the technology will require, as well as what industries may eventually benefit from its implementation. And do you see where Bloomberg is going from this? They're like, oh, people are getting out of the AI trade and into the other AI trade? No, that's not what's going to happen, Bloomberg. They're like, oh, forget the AI stocks, buy the AI stocks. That seems to be the message coming from Bloomberg here. And by the way, on the subject of the power thing, that is an important issue, and I think we're overlooking it. First of all, keep in mind how ridiculously difficult it is to build a power plant in this world right now, right? The idiots with the pink hair show up in droves and like throw manure, sometimes human excrement, at anybody who tries to build a freaking pipeline, a transmission line, or a power plant. All right. The imbeciles, the trust fund brigade still dominates energy policy in this country, and that is not changing. And so all these people who are on CNBC who are saying, oh, get long energy stocks because we're going to have to build trillions of power plants in the United States. We've needed those power plants for freaking decades, and we haven't built them. You think because Sam Altman needs a few more megawatts that they're going to build them now? You're crazy. There is no way there's going to be that big of a shift in the political sentiment just because Silicon Valley wants it. No freaking way that enough power plants are going to get built in time. And every one of these H100 GPUs uses as much power as a family of four, as a household of four people uses in a year. So Elon Musk's 100,000 GPU data center, that uses as much power as a city of 400,000 people. Where's that power going to come from? Well, the existing power grid. They're not going to build enough power in time to meet that new demand, which means the price of electricity is going to start rising if these AI data center build-outs continue and they all come operational at the same time. That means electricity prices are going to go way higher. Oh, crap. That means those data centers become a lot less profitable, doesn't it? That's right, it does. Also, how welcome is the public going to be towards artificial intelligence when their electricity bills start to double because a data center got built in their backyard? I don't think this AI mania, the power needs are not just going to magically appear because of unicorns and rainbows and fairy dust. So the power problem, it's a bigger problem than they're letting on. And everyone's like, well, they're just going to have to build power plants. No, they won't. We've had to build power plants for years, and we haven't. It's not going to change just because Sam Altman wants it to. Speculatively, we've seen some emergence of AI-related trades outside of tech and communications, though those two groups still dominate, according to Gina Martin-Adams, chief equity strategist for Bloomberg Intelligence. Utilities saw a bump in optimism in the second quarter related to the idea that AI would command more investment as well as ultimately result in stronger growth. The utility stocks are rallying because they know power prices are going to go up. The utility stocks are not rallying because they're going to build more power plants. It's just not going to happen. They're not going to build more power plants. They've been trying for years. We built a couple of nuclear plants in the Southeast. They caused some of the biggest bankruptcies in history because we forgot how to build things. Wind and solar are a joke, and they're failing all across the economy. See also all the offshore wind turbines that they've been trying to build in the Northeast for years that have failed. Oh, and they're killing whales, by the way. When they drive the pilings and when they do the ground penetrating sonar for spotting these windmills, the whales freak out and they run up on the beach and die. And the environmentalists are awfully quiet about killing whales to get windmills built. I'm just saying, when did the Save the Whales people turn into the, well, we have to let the whales die so that my windmills can get built? It's a little bit of hypocrisy from the Greenpeace folks, from who, by the way, are also a lot of the AI people. Okay. All right. While tech and communications remain the top two performers on the MSCI World Index year to date, up 19% and 14% respectively, they are the two worst performers so far this quarter. The two biggest gainers since the end of June have been real estate and utilities. Now, they're talking about power supply here as one of the sectors that they think people will rotate into. And look, if AI wasn't a bubble that was about to burst, I would agree. Utilities would be a good investment. Power demand would be a good investment. But I think AI will collapse before more power supply appears, which means, if the power supply doesn't appear, the energy prices go up, data centers become less profitable, renting the GPUs gets more expensive. These AI companies that already lose money, none of the AI companies are profitable, not even OpenAI, none of them are profitable. So where are they going to get the money to pay for the higher prices? They won't. And if AI stocks are starting to go down, that means venture capital and private equity and hedge funds will no longer be blindly pumping monies into these AI companies, which means they won't be able to afford the GPU rentals, which means all the hyperscalers go bye-bye. And all of these giant data centers, I don't know, what do they turn into? Bitcoin miners? I don't know. Or maybe they'll mine Raven coin or something that uses GPUs because Bitcoin doesn't use GPUs. But they're going to have to adapt. And I think that is probably coming. So I'm less excited about the power supply thing. Equipment, now this is interesting. Transformers, equipment that help deliver electricity from one generator to the user, are in such shortage that if you order one today, you'll be lucky to receive it by 2028, according to Ken Liu, a China utilities analyst at UBS Group. And that is factual, guys. There's only like 2 or 3 places in the whole world where you can get a large transformer built anymore. Nobody in the United States makes them anymore. Back when I worked at a nuclear plant in New Jersey called Oyster Creek, we had a problem with one of our transformers. It caught fire and burned, and it was full of oil. It was pretty messy, actually, when that happened. And we were at 50% power after that fire for months because we couldn't get another transformer. It took over a year to get a new transformer made by Hyundai in Korea. And even when we finally got it, it was a nightmare because there was all kinds of problems with it. They actually took a shut down coal plant that my company owned. They took a transformer that was the size of a house, put it on a barge, floated it up the ocean through the inlets and into the bay. They had to put steel plates down on the street because the thing was so heavy it was going to sink in the pavement when they rolled this thing into the power plant. And that's how we got back up to full power in order to get a transformer. So I think investments in companies that make transformers is probably a good investment by itself. I don't think it has anything to do with AI. If anything, it's another reason why the power problem for AI is going to become even bigger, because even if we do suddenly decide we're going to build the power plants to power these data centers, there's nowhere in the world to get the transformers that we need to get that power onto the grid. And here they're saying if you order one now, you'll be lucky to get it by 2028. Well, don't these AI companies need it before 2028? And by the way, they're not ordering it right now. They're nowhere near ordering it because we haven't even permitted any nuclear plants. You still got to go through years and years of lawsuits with the pink-haired committee chair to get that done. So I think transformers is a good investment. That being said, it has nothing to do with AI, nothing to do with the Great Rotation. What else are they talking about here? Renewables. These people are so one-dimensional. They don't know how to say anything else. They're just pre-programmed. I was just like laughing out loud. Renewables right now. I mean, what's the big European renewable maker? I can't remember it. Not Vestas. I can't remember the name of it, but one of the biggest manufacturers of these giant wind turbines right now is about to go bankrupt because all of these turbines that they've installed all over the world are crap. They're breaking. The blades are flying off into midair like a freaking trebuchet launching a boulder at a medieval castle, and they're landing 600 feet away on what? I don't know. By the way, somebody posted a picture of one of these things, one of these windmill blades that had flown like 600 yards before it landed, and it left a crater in the ground. And he posted it with the caption, "Replace your divots." It was hilarious. But renewables, no. Guys, we've invested so much money into renewables. We've still got solar companies going bankrupt. The wind companies are going bankrupt. The grid is being made less reliable because of renewables. The Green New Deal, the energy transition, it is fake. See also electric vehicles. That's not happening. And again, Bloomberg just doesn't know how to say anything else. Now, this is kind of funny. They're telling people to invest in copper. I mean, I don't know if you guys saw it. Like, copper had a really good beginning of the year, but the price of copper has been collapsing for the last month or so because China has started dumping their copper on the open market because China is no longer building entire cities that nobody needs or wants to live in. China has been building empty cities for 30 years. They've got tens of millions of empty apartments, vacant structures. Why would they need to build more? And China has consumed 50% of the world's copper for the last 30 years, and now that market is kaput. And Bloomberg is saying invest in copper because, we're going to need all these electric cables for our windmills and our solar panels that are also going bankrupt in order to power our data centers that are probably going to go bankrupt. Again, these guys are just one-dimensional. And then they go on and they're like, invest in data centers because data centers hasn't been exactly the prime beneficiary of the AI mania. So, just goes to show you the great rotation when Bloomberg is like, what are we rotating into? And Bloomberg just says, rotate into the same crap we've been telling you to buy for the last 2 years anyway. It's not much of a rotation, Bloomberg. It's time to maybe go outside, get some fresh air, touch some grass, look at the whole other world outside of your Green New Deal, AI-dominated wet dream that you've been pumping for the last 2 years. Because look at this. I mean, if you're still not convinced that AI Mania is a farce and that it's a bubble that's been completely manufactured by Wall Street and it's going to end in tears for most of the people who got in on it, take a look at this article in Forbes from just a few days ago. 77% of employees report that AI has increased their workloads and hampered productivity, study finds. 77%. 3/4 of people say AI is making things worse and less productive. I thought AI was going to put us all out of work and we all need to go on universal basic income and the chatbots are going to replace everybody, the truck drivers, the customer service people. We're all going to lose our jobs to AI. How come the survey says AI is making things worse? And by the way, I was looking at some of the comments on Twitter on this story. Everybody's like, because they're using AI wrong, or these are the people whose jobs are going to get replaced by AI. Yeah, the problem is everybody is using your product wrong. It's not that your product sucks. The cope was so strong with these people. Anyway, let's read on a little bit. The rise of AI has caused a mixture of excitement and fear as it becomes a standard part of our lives. Some say it's a risk to civilization as we know it, while others insist it will transform the way we work, live, and interact with one another, or how we glue our pizzas together. The part that is not debatable is that not only is AI not going away, it's on the upswing. I think that's very debatable, to be honest with you. But you can get that tattooed. Yeah, you can get that tattooed right next to your Luna tattoo, maybe. It's not going away. So it's important to develop a reasonable comfort around its use. I realize that's a tall order when there's so much written about the uncertainty of how AI will affect your job. But now let's talk about how this global study reveals bad news about employee AI skills. So they're chalking it up to the employees are doing it wrong, not to the tools suck. The new global study, in partnership with the Upwork Research Institute, interviewed 2,500 global C-suite executives, full-time employees, and freelancers. Results show that the optimistic expectations about AI's impact are not aligning with the reality faced by many employees. The study identifies a disconnect between the high expectations of managers and the actual experiences of employees using AI. Despite 96% of C-suite executives expecting AI to boost productivity, the study reveals that 77% of employees using AI said it has added to their workload and created challenges in achieving the expected productivity gains. Not only is AI increasing the workloads of full-time employees, it's hampering productivity and contributing to employee burnout. And guys, that paragraph was so amazing. I tell you, I got to send a shout out to my buddy Carl over at Internet of Bugs. Last week, I posted 3 videos from my very long interview with him. We ran an hour. It wasn't meant to be that long. It was just, he just kept talking and I just let him go because it was good. Everything he was saying was great. And so I broke it up into 3 different videos. And one of the things Carl said was AI is going to displace a lot of people, but not for the reasons we think. And I'm paraphrasing a little bit here. I'm not quoting him directly, but he basically said that all of these idiot managers and middle managers expect AI to be this amazing thing. And so they're already laying people off and cutting jobs, expecting AI to come in and do their jobs for them. And then they're realizing, oh crap, this software is garbage and it doesn't work. And they're actually going to do a lot of harm to their companies. And they're going to end up hiring a lot of these people back after everything goes to shit. And man, that is exactly what is being described here. 96% of these C-suite people are expecting AI to boost productivity. So every single one of them, maybe like one guy Who's the lone boomer in this survey population that said, no, I don't expect an AI boost in productivity? I'd like to meet him. But 96% of C-suite executives have these high expectations, and that almost 8 out of 10, more than 3 out of 4 people that you talk to, 77% of employees say it's just making a mess. That is just adding to their workload. It's making them less productive, and it's burning them out, which means a lot of people are going to end up quitting their jobs over this. AI is making a mess. This is exactly what Carl described. To add insult to injury, nearly half, or 47% of employees using AI say they don't know how to achieve the expected productivity gains their employers expect, and 40% feel their company is asking too much of them when it comes to AI. Workers are feeling the strain from rising productivity demands, with 1 in 3 full-time employees saying they will likely quit their jobs in the next 6 months due to feeling overworked and burnt out. The majority of global C-suite leaders, 81%, acknowledge they have increased demand of their workers in the past year. Consequently, 71% of full-time employees are burnt out, and 65% report struggling with their employer's demands on their productivity. Guys, I don't know how to break this to you, but the executives are all saying AI is the next big thing and it's going to revolutionize everything. And yet all of the people who are actually using the AI say it sucks, it doesn't help, it's making things worse. So who are we going to listen to? The executives who have bought this mania hook, line, and sinker, or the people who are actually using the software and saying this isn't what we think it is, guys? It doesn't work like that. I found this so hilarious to read this. And once again, shout out to my buddy Carl from Internet of Bugs. Check out his channel, guys. He's really sharp. He's got 30 some odd years of experience developing software. He's worked on some very cool projects, and he's got a very down-to-earth, pragmatic approach to his career and to this AI mania. And especially if you work in the software industry, if you know somebody who works in or wants to work in the software industry, definitely check out Carl's channel. Worth the time over there. Carl's done some amazing work. So enough about the AI being garbage. We've all heard this. Let's talk about some of the sectors that we might be great rotating into. And I'm just going to talk about a couple of random names. Now, we're going to start with Johnson & Johnson. Now, I own Johnson & Johnson, and I'm not talking my book here. This is the only stock that I actually own that I'm going to be talking about today. This is one of my long-term set it and forget it's, and I reinvested dividends. I've been in this stock since freaking 2004. I'm going to stay in it probably till I retire. But even Johnson & Johnson, right? This is like healthcare, right? Baby boomers are aging. It's a stock that's probably going to do well. Healthcare's somewhat immune to recessions. So maybe Johnson & Johnson does all right in a recession. Their consumer products division may not fare so well. If we get any kind of consumer deflation, pardon me for hoping, J&J wouldn't do so well. But even look at J&J, which again, I own. But J&J trades at 24 times earnings, guys. That's a PE of 24 for Johnson & Johnson. It's a consumer staples company. That's way too rich for a consumer staple. I mean, if you're not a big growth name, paying anything more than 16 times earnings for a company, you're overpaying, especially if they don't have significant growth. So even Johnson & Johnson, which hasn't really benefited from this monster run in the stock market, in my opinion, it's probably still too expensive. Now, I'm not selling my J&J. I'm just not adding to my position here. And even here, look at the dividend yield, 3.1%. Okay, that's a decent yield, 3.1%, but you can still get 5.4% in a 1-month T-bill or 5.37. So why are you going to take additional price risk in a company like J&J yielding 3% when you can go get 5 and change for no risk in a 1-month T-bill? So even J&J doesn't really make sense. So if I was going to great rotate, I wouldn't great rotate into this one. Again, I own this one, guys. I'm not talking about my book. Now, that's the only one that I own of everything. I don't own any of these other names. United Health is another one. If you want to great rotate into health, okay, the PE ratio, even worse, almost 38 times earnings for United Health. No freaking way. Dividend yield, 1.5%. This is not like a safe conservative name, guys. And United Health, by the way, they've got some controversy to answer for. I did a segment on DNN a few weeks ago. Another plug for the Doomers News Network, link down below in the description. But I did a segment on United Health and what they have been doing to rip off Medicare Advantage by just manufacturing diagnosis out of nowhere, giving people $50 gift cards to send nurses to their house to create a fake diagnosis so they could squeeze more money out of Medicare. We might see United Health hauled in front of Congress at some point here. So there's some risk to a name like this. Again, this is one that I'm not going to rotate into. What about something like energy? Okay, energy is a decent name, right? It's a dividend yielder, and the energy stocks, they're like the redheaded step stocks of the market right now because of the ESG movement. ExxonMobil, Chevron, names like that, they have been suppressed by this political drive to use our retirement money for someone else's political motivations. But even this one, okay, PE ratio of 14.5, that's not bad. All right, so ExxonMobil, I think fairly priced here at 14 times earnings. Forward dividend yield, 3.25%, 3.8%. The dividend yield, it's a little light. You can still get a better yield in a 1-month T-bill, guys. You're going to have a hard time finding a better yield. So from a risk-reward profile, even a 1-month T-bill looks a little better than ExxonMobil. And I don't know if you guys have seen, oil prices have been pretty beaten down lately. And if we are headed into a deep recession, energy prices go down during recessions. Also, if we're heading into a possible Trump presidency, typically oil prices go down during a Republican presidency because they open up domestic production. So you tend to get more supply hitting the market. So even a name like ExxonMobil, I mean, if I had to buy one name on this list, it would probably be ExxonMobil. But even that one, I'm still more comfortable sitting in cash or sitting in T-bills. What else we got? Consumer staple like Coca-Cola. That's a safe name, right? People drink Coke in good times and in bad times. Well, not so much. You got the Ozempic thing is going on. That's taking a big bite out of the soda companies and sugary drinks. From a PE ratio standpoint, Coca-Cola trading at 27 times earnings. No, thank you. That's like a tech stock valuation, not a consumer staple. And again, with a 2.9% yield, you do better in a 1-month T-bill. So I'm not going into Coca-Cola either. What about something like a Colgate-Palmolive? That's another like consumer staple, safe dividend yielding name. It's up 3% today. People are rotating into that one, but they're paying 31 times earnings for this stock. For dish detergent, for toothpaste, 31 times earnings? Sorry, not getting my money. And of course, that 2% yield, half what I can get, less than half of what I can get risk-free in a T-bill. So no, I'm sitting this one out too. And the last one I'm going to talk about is the gold miners. I know some of you guys are probably saying, what about miners? Miners is interesting. All right. Now, first of all, some miners give me the creeps. The junior miners, there's so many snake oil salesmen in the junior mining space. I'm very cautious about the junior miners. But we're looking at GDX right now. This is the VanEck Gold Miners ETF. I'm not going to mention any specific miners. I own a few miners. I don't own GDX. But even looking at this one, PE ratio 30 times, that's a little rich for me. The yield on this one, 1.47%, that's a little low. You do better in T-bills. Now, year to date, the miners have done pretty well, right? They started the year around $30. They're at about 36 now. So, okay, picked up about 20% year to date. It has somewhat participated in this rally in gold prices. Now, look, going back 5 years at GDX, guys, this thing is nowhere near the highs we saw in 2020 and 2021 when GDX was at $43, $39. Gold prices have surpassed by a huge margin where the gold prices were in 2021 and 2020, and yet the miners ETF is still nowhere near those highs. So, in my opinion, this one's actually not a bad idea. Again, guys, this is just something to think about. I'm just talking about what I would do with my own money. This is one I might consider also, like a GDX. I'm not going to go into specific mining companies. There's a lot of pitfalls there. I like to spread out my risk, but this is one I might think about because it looks like the miners so far have pretty much sat out this rally in gold. They're up year to date, but nowhere near as much as they should be up based on this move in metals. But I would add metals has had a pretty rough week. So, buying that one right now might be a tough sell as well. But anyways, guys, when we're talking about the great rotation, the more I think about it, what would I buy if I owned a whole bunch of AI stocks and I was getting out of them and I managed to sell and say I was the first one to sell, I didn't wait until the bloodbath begins. What would I do with the money? Guys, I'd probably still sit in cash. Almost everything I look at, almost everything is still overpriced. Every asset class across the board is almost overpriced. So I'd probably keep doing what I've been doing. I'd probably T-bill and chill. I'd sit largely in cash. I'll take my 5% as long as I can. And a 25 basis point rate cut is not going to dissuade me from my T-bill and chill mentality. I'm not worried about 25 basis points. I'd probably still buy a little bit of metal here and there. I wouldn't pile in the gold and silver right now, but I'd buy a little bit on the regular, and I'd probably keep buying a little bit of Bitcoin on the regular. But right now, I'd probably sit largely in cash because everything I see coming, if there is actually this big flushing of the toilet, like I think is coming in the AI stocks, we're going to see a lot of firms blow up. We're going to see a lot of debt going bad, and we're going to see a lot of people scrambling for cash when that happens. And when that happens, they're going to sell anything they can get their hands on, including gold and silver and Colgate-Palmolive and Johnson & Johnson and ExxonMobil. They're going to sell everything they have to meet their margin calls to raise the cash that they need to, which means cash is where you want to be if that's what everybody needs. And I just want to say thank you so much to Mr. Water 168, who says, does the recent sell-off caused by the rise of the yen? That's an awesome question, Water 68. And I would refer you to that video I did yesterday with Joe Brown from Heresy Financial. It's at the top of my feed on my channel. If you go to the videos tab, we did talk about that one. I don't know that the rise of the yen caused the sell-off this week, but I do think the rise of the yen contributed to the sell-off this week. The cause, if I had to put my finger on a cause, I would say it was the earnings call with Google and Tesla, and just some of the ridiculous statements that Elon made about robotaxi and humanoid robots, and Google saying, the risk of underinvesting in AI is much greater than the risk of overinvesting, which means we're just blindly pumping money into this thing because everybody else is. I think that had more to do with the sell-off we saw in tech and triggering this big rotation, combined with a lot of these analyst notes that are coming out very critical of AI's failure to deliver on anything. But then when you've got the yen suddenly strengthening because the Japanese finance ministry has been dumping dollars to buy yen to try to increase the price of the Japanese yen. Let me bring up a yen chart while we're looking at this. I think I had the yen chart ready to go. So I think, when the Japanese finance ministry dumped here, they dumped dollars and bought yen. That started this strengthening of the yen. This is the chart of USD JPY. As you see this moving down, that's the yen strengthening versus the dollar. The finance ministry also was dumping back here. But then this strengthening right here, this third and final one, this appears to be organic. This appeared to be people covering their shorts against the yen. A lot of people have been doing the yen carry trade. Check out Michael Gayed from the Lead Lag Report. He's been talking a lot about the yen carry trade for well over a year now. Pretty good call there by Michael. I think people have started to cover their yen shorts, which means whatever assets they bought with that borrowed money, they have to sell it to cover their shorts. And we know a lot of people have been borrowing yen and converting to dollars and then buying assets in other countries with those dollars. And I think that includes tech stocks. I think that includes AI names. And so I think the yen's strengthening this week contributed to the sell-off. And you can kind of tell because when the sell-off stopped yesterday morning, the sell-off stopped right as the yen strengthened. If you break this down to the hour, right, where we had this one green candle yesterday when we bottomed, here, right here. If you zero in on the hour that the yen started to recover, which pretty much coincided with the U.S. GDP print that was better than expected, that 2.8% GDP initial estimate, that point is when the yen stopped rising, and that's also when the tech stocks stopped falling. So I do think the yen played a role this week. Was it the cause? I don't think it was the cause. It was a contributing factor, though. Now, the yen carry trade, let's zoom in on this, or zoom way out on this, right? So we're talking about this decline in the yen, but let's look at what the yen has done in the last couple of years, guys. All right, so this unwind of the carry trade that we've seen in the last couple of days here, all that really is this move right here. We have got a long way to go if we're really serious about strengthening the yen back to where we were before this ridiculous experiment in modern monetary theory. If the yen does strengthen that much, I'm not saying it will, but it could. If the yen strengthens that much, you're going to have a bloodbath in U.S. risk assets, I think. Abso-freaking-lutely. You're going to see volatility spike. And when volatility spikes, all the people who are short volatility right now, they're going to get margin called and wiped out, and they're going to have to sell other things to cover their margin calls. And that's when stuff can really cascade and snowball. So Water 168, that's an excellent question. You're right to suspect the yen. I'd stop short of saying the cause, though. I think it's more a contributor. Thank you very much, sir, for the super chat and support of the channel. And thank you to Sam for being a channel member for 2 months. What does Yellen think about the yen appreciation? Oh, you're teeing me up a little bit there, aren't you? What Yellen thinks about the yen, I think Yellen thinks that I really hope that the yen doesn't continue to strengthen against the dollar because I need the Japanese to stop selling my treasury bonds. I need them to keep buying my treasury bonds because I need to get this geriatric potato reelected. Oh, that's right. It's not the geriatric potato anymore. It's his cackling buffoon sidekick now. You see what I have to work with over here? Yeah, the Japanese need to stop selling my debt. And if the Chinese could follow suit, I'd sure appreciate that. In the meantime, I'm just going to continue with this treasury buyback that makes the national debt worse and it makes the inflation problem worse at the expense of pretty much everybody because I am a selfish political hack and I don't care how much damage I do to the average working family. Oh, thank you, Secretary Yellen, for those unusually honest words. I mean, those her words, not mine there. I mean, wow. A rare glimpse behind the curtain from Secretary Yellen today. Thank you so much, Janet, for those words. By the way, guys, speaking of the Janet, the Bloomberg is telling you to ignore what your eyes and ears are telling you. Look, guys, I take a lot of cheap shots at the financial press here, and this is not a cheap shot. This is a much-deserved crack across the jaw because Bloomberg is so full of it today with this article. I couldn't get over how blatantly partisan and just outright dishonest this BS from Bloomberg is. Yellen rejects Rubini claim of manipulation in treasuries. All right. Let me just read into this article. U.S. Treasury Secretary Janet Yellen firmly rejected an accusation from economist Nouriel Roubini that her department has manipulated the issuance of treasury securities in a way that lowers real borrowing costs. In an interview with Bloomberg News, Yellen said Rubini's argument laid out in the paper posted Friday suggests a strategy that is intended to ease financial conditions, and I can assure you 100% that there is no such strategy. We have never, ever discussed anything of the sort. The paper echoed a line of attack that several Republican politicians have recently leveled at Yellen. By the way, I haven't heard any politicians level this accusation. I have heard plenty of economists, plenty of finance guys do this, but it's not a Republican talking point. It highlights a move by the Treasury in November to temper a ramp up in the issuance of longer-term securities, relying instead relatively more on short-dated bills. They argue that this was done to hold down long-term borrowing costs because that's exactly what it was done for, aiding the economy in the run-up to the November election. That argument hasn't had traction among bond dealers and strategists and Treasury officials who oversee debt issuance. Joshua Frost highlighted this month that the department's actions were within the scope of market participants' expectations. Well, Joshua Frost, whoever you are, you're full of it. Everybody knows what Janet Yellen is doing with the Treasury buybacks and the overissuance of T-bills. Everybody can see what they're doing. It's right there in front of everybody's face. It is obvious that Janet Yellen is artificially lowering long-term borrowing costs by relying more heavily on short-term T-bills, which are more expensive to borrow. Thus, she is making the government's insolvency problem worse for the benefit of the candidate. She wants to get reelected because she wants to keep her job. And it is so obvious what Janet Yellen is doing. And Bloomberg, shame on you for publishing this ridiculous partisan puff piece crap. This is everything I hate about the financial press, perfectly packaged up into one article. They are telling you ignore what your eyes and ears are telling you. And by the way, shout out to Rubini and I can't remember who else was working on it, but I retweeted this thread earlier this week. And when I retweeted it, if you want to go back to my Twitter thread and see what they posted, which was excellent work, by the way, about how the issuance of too many short-term T-bills is skewing the whole economy, and it's causing a lot of damage to the long-term finances of the country. I retweeted it, and I retweeted it with the caption, when you put a central banker in charge of the Treasury, you end up with a central banker in charge of the Treasury. Shame on Bloomberg for this. That was excellent work by Rubini and Co. It was spot on. It was 100% accurate. It's obvious what Janet Yellen is doing. And Bloomberg and all these people who are saying, oh, it's perfectly within the purview of the Treasury to do this. Shut up, you partisan hacks. You ridiculously partisan hacks. Look, you don't have to like Trump. You don't have to like Republicans. But tell the freaking truth. This is so emblematic of what is so freaking wrong with the press. And it's why so many people are watching me right now and watching other people on YouTube, because you can't get honest interpretation of the data from anybody. Everybody's got a freaking angle. Everybody is trying to sell something, whether it's a candidate or a service or a freaking chatbot or a large language model. Nobody just gives you the information anymore. Nobody just does it. All right. And man, when I saw this, I couldn't believe it. Shame on Bloomberg. Bloomberg, this is a new low. And this is from the same outlet that gave us the bad vibes thing, right? They keep putting, there's no recession. The problem is you plebs and your bad vibes. You just can't tell how good you have it. What a freaking joke Bloomberg has turned into. And look, guys, outside of stupid articles like this, Bloomberg is one of the best outlets for financial news and commentary, because when something breaks in a bank or in a bond market or somewhere, Bloomberg is usually first. But unfortunately, Bloomberg puts their political bias and their spin on everything, and the average person can't spot that kind of bullshit. They can't translate around that. They can't siphon out what is the talking point, what's the partisan nonsense, and what is the actual factual information. Bloomberg is doing their readers a huge disservice with this. They need to be better. We need to be better. Shame on Bloomberg for this one. All right, I'm going to get off of my soapbox right now, guys. We've been running for almost an hour. Oh, wait. I got a few more here. I'm sorry. Sorry, guys. I got a little wrapped up. My buddy Jose Orozco. Thank you so much, Jose. He says, long live my favorite Twitter rando, the Melon King. I am nobody's king. I want nothing to do with that job, buddy. I just want to be left alone. I'm a recluse. I like my place. I like my people. I like my melon heads. I just want to be left alone, man. I don't want to be in charge of anything. And unfortunately, that makes me a radical. Not wanting to be like overseen and ruled and told what to do makes you a radical these days. Well, if that's a radical, then put that right here next to Rando and Permabear and Melonhead and Master of Space and Time and all that other humble stuff. We'll put that all in there. Thank you so much, Jose, the keeper of the Bucky's Corn Nuggets. I appreciate that, brother. Thanks for being a loyal Melonhead. And thank you so much to Don Peterson, who says, we appreciate you, Jack. Well, I appreciate you, Don Peterson. Almost called you John there. Thank you, Don Peterson, for being a Melonhead member for 4 months. I appreciate that very much. And thank you to all of my other amazing Melonheads and magnanimous Melonheads on YouTube and Patreon for supporting the channel. You guys are awesome. Thank you so much, guys, for supporting the channel. Links down below to all that good stuff, including DNN, the Doomers News Network, where I'll be live again for the 3rd time at 7 p.m. tonight. Eating the Wheaties, guys. We're putting in the work today. So I'll see you guys later tonight on DNN. Hi, Mom. Hi, Dad. I love you guys. And everybody, until next time, live small and dream big.